Alright, what is up guys? This is my first video and we're gonna start off with a trade recap. Today's February 2nd, 2026. No, February 19th, 2026, my bad. And yeah, so today just get straight into the trade recap. I literally just start off marking out previous day highs, previous day lows. Right, we know yesterday we tapped into the daily gap. That was the main draw on liquidity when trading yesterday for me. Unfortunately, I couldn't catch a trade, but it is what it is, right? On the 4 hour, there wasn't really much to tell. There wasn't really some solid movements from after yesterday, but we did. Well, I did see that before market open, we were hovering, or we might have been tapped into this 4 hour gap from yesterday, where we manipulated a leg and caused the move up. So this manipulation leg low was clearly a draw on liquidity for me. And then moving down to the hourly time frame. So this is the time frame that really gave me most of the information, gave me more of the structure in terms of what I want to see the markets do going into market open. And we could clearly see that we're disrespecting bullish confluences and respecting bearish ones. Specifically, we can see that we're accumulating, just tapping into these bearish rally gaps and then distributing lower, tapping into the bearish rally gaps and distributing lower. Right, so that's just like a textbook downtrend. But basically, going into the market open, you could ignore these candles and just focus right up until 9 a.m. Basically, we did have news, red folder news today, which caused a data wick low. So going into market open, we did have data wick lows, and this bearish rally gap was untapped, but it was tapped on ES. I didn't really care too much about that because it was more of a consolidation from 5 a.m. all the way to market open. Right, we didn't have any specific moves. It was just kind of ranging. So my idea going into market open was, all right, cool. We have all these draws in liquidity. We have this hourly low right here. We have these stack lows from previous lows as well, and this other 15-minute low. We have and on top of that, we have data lows, right? So we're hovering, we're kind of consolidating. What I want to see is a manipulation in either the upward or downward direction. And my condition for the upward manipulation was that, all right, cool. If we're consolidating, we're going to manipulate upwards into this hourly gap, and then we're also going to be tapping into equilibrium of this range. And I was pretty confident that from there, price would want to move lower to draws in liquidity that we created from the week, from previous days in the week. So these draws in liquidity. And my condition to target this hourly gap was that if we took out these draws in liquidity to the downside, right? So if we took out data wick low, and this hourly low and previously low, and we rejected this 4 hour gap, that would have been a key element, the rejection of this 4 hour gap. Then I'd be looking to trade to the upside and target this untapped hourly gap, potentially both of them, and potentially this hourly gap, depending on how the price or how the market moved, right? So that's my thought process. And then going into market open now, market opened and we literally straight up took out data lows, right? And we just kind of consolidated for the next 15 to 20 minutes. The consolidation made me realize, or made me think that I thought really strongly that this was not the true manipulation leg of the session. I did think that, okay, yeah, we took out data lows and we formed the SMT, but that wouldn't really dictate how we're going to move for the whole session. I thought that we're going to tap into the hourly gap based on how we moved in the first 15 minutes, and then from there we're going to get a distribution leg and a rejection off the hourly gap after we tap into equilibrium. So my thought process was, all right, cool, we tap into the hourly gap. I'm going to take the highest time frame inverse because that is my entry model, and either high Stanford inverse or a strong displacement candle. And what ended up happening was on the 2 minute, we had an inversion fair value gap that I took. Now it didn't end up playing out. I did get stopped out. It was a high RR trade, and I usually don't take such high RR trade, but this trade did look probable, and I became more confident in my trades. And so I took this trade. We had some really good displacement into the 5 minute gap. One mistake I did make is that as soon as I took the 2 minute inversion, the 5 minute gap opened up. And so that's one thing I could have looked out for better to make my trade more probable, right? So if I wanted to see shorts and if price action was truly going to reject off this hourly gap and move and displace towards these lows, then we would have obviously inversed this 5 minutes. So I could have taken that 5 minute inverse entry, which would have lowered my RR, yes. But on the bright side, or the pros of taking this trade rather than the 2 minute inversion, is that it would have inversed a higher time frame gap, which would have made the trade more probable. And yeah, even though it's lower RR, it's more probable. And then if you take these throughout time, you're just going to increase your profitability. So I think that's just one thing I could have done. And yeah, so I took the 2-minute inversion. We had a pretty good displacement. I didn't go break even. Um, and then as soon as I saw this rejection candle form, I was like, all right, this trade's not gonna work out. Not because I had fear of taking a loss. I've taken many losses, but I just had market experience. I'm like, yeah, this huge rejection candle into the 5-minute, or this trade's not playing out. We're not ready to move down yet, and so I just cut my loss early and took like a almost half the size loss. So I'm not really too upset about that. Today was a tough day to test psychology and my patience because we had such good price action throughout the whole week. But it is what it is. That's what trading is, I guess. Um, Also, one other thing I could have noted was that with the 10 a.m. open, we had the 4-hour candle closure, and with the 4-hour candle closure, we did have a rejection of this 4-hour gap. But the reason why I still took a trade to the downside, targeting these draws in liquidity, was that we did have some sort of rejection to the upside as well. So that's what didn't prevent me entirely from not taking the trade. So I'm trying to think of anything else I'm trying to cover. Not really. We just ended up consolidating, chopping around, and then finally displacing lower to the draws in liquidity. And I think leading up to tomorrow's session, we're gonna have taken out these lower draws in liquidity, but we'll see what happens. And yeah, first trade recap. Just trying to post, get myself out there, get my thoughts and my content out, and try to see what other people think about my trading, thoughts, inputs, questions, and yeah, that pretty much concludes everything. I'm gonna just journal this on paper, and on top of the video, I'm gonna watch it a couple times, see what I could do better, and yeah, that's pretty much it.